Now I put the recorder on. 2:03, September 26, 2018, FOMC release was out, and we kind of paused for a little bit. Then it looks like the S&P and the NASDAQ exploded to the upside for a bit. And we got pretty close to this 29.33 half, which was a swing level. What I'd like to do right now, ladies and germs, is move on over for the e-learning, the session here, and then we'll keep popping back to the markets here in a bit. All right, some of the topics we want to talk about, I'm going to go over them in a view, then I'll pull it off to the side, and then we'll be able to watch the charts directly live, and I'll answer the questions. It says, as a new futures trader, which instrument is best to focus on? Which days are best? Which days are worst? Want to know what the considerations are for trading outside of regular trading hours? And the instrument you'd use, the time of day, numbers of contracts, how do you determine targets and stops? And which time frames do I use? We'll go over that. Discuss each indicator and how I use it. There'll be a bit of time discussion there. And how do you choose your swing levels? What setups and patterns do you find work best? What are the consideration and criteria for using each of your Renko settings? When do you go from one to the next? Why don't I use Renko for ES? Please explain your continuation pattern and its relationship to the measured move. And how many ticks above or below the continuation pattern, high or low, do you use for an entry? Do you wait for a candle to complete before entering a trade? Now, it's not just for the continuation pattern, but it's for all. And then I'm gonna bring it back to here. I'm gonna minimize it. I'm gonna take it off to the side, so that we can talk. All right. As a new futures trader, which instrument is best, in quotes, to focus on? Well, the one that makes you the most money, I guess. That's a smart aleck answer, but the answer is really, it all depends on what your objectives are, how much money you have in your account, your tolerance for, how much risk you can take in amount of dollars and stuff. I'll tell you that the Dow is probably the least volatile and uses $5 per tick. If I were to pick only one instrument to trade and trade first, I'd trade on the Dow, the YM. It's $5 a tick. Each tick that you see there is $5. The amount of mental gymnastics you have to go through are less for that than any other. Here we come back in the markets. Now, the Russell and the NASDAQ both do $5 per tick. Sorry, per point. Is it? No. $5 a tick. But there's 4 ticks and a point in NASDAQ. And there's 10 per point in Russell. And the volatility in the NASDAQ is much higher, I think much higher than you see in the Dow on most days. Again, everything is predicated on most days. You look at you're about 20 to 30 tick risk here in the YM. And let's see, the Russell's looking at 32 there. This is going to be after the FOMC switch, but that's only 29. And then when you go over here to the NASDAQ, you're talking 47, and right here is 49. Whoops. Let's go over earlier in the day. And this one was a little more subdued, but it's still 42. And this one right here was less than that. It's 37. So you go find that the NASDAQ moves. It's a little more volatile. If you want movement, that's the instrument to trade. I know a lot of people who are active traders. They love the NASDAQ because it moves. That's the good part. The bad part is it moves. So if it goes against you, it really goes against you. And a lot of times, because the intra-candles are so wide, you have to give it more room, which is more room in dollars than you may want to. The Dow is a little less frenetic. So, bottom line for question number one, it's probably best to focus on the Dow, but that's my personal impression. All right, and which days are best and worst to trade? Well, that all depends. I used to say that I hated Fridays. I hated options expiration days, in the afternoon especially. I would only trade in the morning. But I did a sample of, I did it a month ago, so it's a little bit dated. But I did a sample from the 1st of May till maybe the 1st of September. What days were the best trading days and which were the worst trading days? I found it to be very, very surprising that Friday was my best day. Well, maybe it's not surprising because on Fridays, I've convinced myself not to trade in the afternoon, only trade in the morning, and to be extremely choosy on which trades I take. So maybe by applying those two concepts, I've made it my best day on what could be the worst day if I was just trading willy-nilly. Okay, so the worst days, it turned out statistically to be basically a tie between Tuesday and Wednesday, and that was not unsurprising that oil was trading on Wednesday. And what I did is I took that data and I went back and I started looking at what I was doing in oil trades. And I think I was trying to force trades. So therefore what I did is that the last 3 weeks I've taken no oil trades on Wednesday. I've looked for them. I just couldn't find a good reward to risk ratio, so I passed. There were a couple that came out today that were, possibly tradable for 10 or 15 ticks, but the risk was 15 or 20 ticks. So a negative reward to risk ratio is not good. So by applying that concept, I've actually made it less bad. So, Wednesdays are not that bad. Then just recently, there were 6 weeks in a row in the oil we were winners. Sometimes only $50 or so, but trading only one contract. All right, third question was, what are the considerations for trading outside of regular trading hours? All right. One, the volume there is very low and it's very slow. Let me start with the possibility of trading maybe at night. There's basically 3 times. I'll start from around maybe 7 or 8 o'clock at night all the way till about 10 or 11. That's Asia markets. So the early evening in the Eastern time zone, and all these times will be Eastern. They'll basically be they'll have a tendency to move. I have not quantified this totally, but they'll have a tendency to move after we've had a significant event here in the United States in price movement. Either they'll give some of it back, or they'll play catch up to try to get back to us. So that's the first thing about time. The second about time is when Germany and England open between 2, 3, and 4 a.m. Eastern Time till maybe about 5 or 6. That's kind of the 2 a.m. to 6 a.m. window. I guess if you were on the West Coast, you could possibly stay up and trade that and then go to bed. Or in the U.S., you would have to get up in the middle of the night and then hope you could get a nap in the middle of the day. All right, so as far as time of day, and then obviously you'll have between 7 or 8 o'clock in the morning, and especially right around 8:30, you'll get a lot of movement when we get the economic reports that come out. So that could be a time of day that could work pre-market. The problem is a lot of times the pre-market is less liquid, although it starts to get really liquid after about 7 or 8 o'clock in the morning. But it's some herky-jerky motions because a lot of it's traded by the computer. So you're competing with the black box. I don't like to compete with the black box. Let's take a look here. Let's go to a 5-minute chart. All right. This is the ES. I'm going to take it back. I think I've got about 5 days worth of data loaded. Okay. All right. We had 7 o'clock. And in fact, why don't I do it this way? We load 5 days worth of data here. We'll take ourselves all the way back. Okay, what you're going to see here is this is at night, 6 o'clock, 7, 8 o'clock at night. You get some movements, NASDAQ, and then you get a move here around 1 o'clock in the morning, 2 o'clock in the morning. Then it starts to top out here again, 2 o'clock in the morning to 3. This is actually 4. Then between 4 and 7, you retraced 100% of that move, pre-market. Then you retraced it back up again to the top by 9:30 open. Now, what does that mean? The markets are going to move. The volume's going to be okay. One of the problems in after hours or not regular trading hours is you're going to get possibly a bit of a spread. You could get there only being a 1 tick spread, which is normal what we have in regular trading hours, but occasionally it'll go to 2 or 3, and if there's any kind of a news event, it could go to 3 to 5. So giving the market that kind of head start's not good, but if you need to trade that because one, that's the only time you could trade, or two, you are patient, and that's the biggest problem for me, for most of us, is having the patience to trade outside of regular trading hours. The NASDAQ's just going bonkers. We're up at 67. I'm talking about 75, 76, 66. So, okay. So that would be the one consideration of trading. A couple of considerations is the speed is a lot slower. That could be good, but that could also, for people like me who like things to go fast, it could tray your patience, and you'll end up possibly taking a trade that you shouldn't, just because by God, I'm here, I want to trade something. All right. Number of contracts in this, it should probably be no different than a regular day, the regular trading hours. However, the movement in there sometimes is less. Sometimes I will back off by one Unarenko. So whereas I would have 10 here in the regular trading hours, what I might want to do here is to back off to either a 6 or an 8. Well, if I back off to an 8, and we start seeing some slightly different patterns here, you'll get more signals maybe, and that's one thing that doesn't happen at night. Well, overnight, is you get fewer signals. So the one way to generate more signals is to change your criteria. Let me change this criteria on the indicator real quick. Need to make that 0 so we get all of them show up. All right, so we got along over here. We didn't get any short until we got over to here. Yeah, you'll get fewer signals overnight, and this one kind of went into the hibernation mode. What else has happened? That's pretty much it for outside of. No, number of contracts, good. Because you reduce the size here, your targets and stops will already be probably no different. They're going to be at swing levels. So I don't trade any differently at night. Let me bring up the trades. All right. Now, I had a 10 Unarenko last night. I didn't change it. Possibly could have. And we had a continuation pattern somewhere here just before 7 o'clock. And we did a breakout just after 7. And we had a measured move over here to the left. And I was figuring a target. I've got them blocked over. There's target 1's right at this level here underneath my arrow. And target 3 is up there, right there at that dot, which is where that red band is. So I'm using theirs, but the 20 ticks was target 1, 56 ticks was target 2. It was smoothly moving and smartly moving up. I'd take very little heat till we got right about in here, a little bit of extension. But you could potentially use less, smaller targets, and hence also maybe a tighter stop if you use a different setting. And that, in this case last night, I just still used the 10 because it seemed to be working. All right. And that brings up the question, what time frames do I use? Well, I don't use time frames per se. In the ebook, I talk about chart settings and keep it in the time frame. Let me charts and patterns. In the ebook, it has, time versus range charts, why one over the other. I don't think that's what you were asking. I think you were asking is which ones do I use and why. All right, and then there's ticks. I don't use volume. I'm pretty much a price guy, so price lends to swing levels and Renkos. And let's go ahead and talk about the potential time frame differentials. My standard now, and all of it's based upon, first of all, what works in the markets, and they don't always work the same every day or forever. When I first started trading, I was trading the Dow, and I was using 4 and 6 Unirinkos up until February of 2018. January, February, when we had the big knockdown, volatility shot through the sky, and it's pulled back, but it's still stayed elevated ever since. Our volatility used to be in the single digits. Well, we're now up from about 12 to 15, with 17.5 being the norm over the history of the VIX. Well, I'll use a 1014. That does tend to work fairly well. What it does do is I get a lot of the continuation patterns when I do that. It doesn't mean that I don't get continuation patterns in the other charts, but I get more in the 1014 than I do any other on the NASDAQ. Let's go to the 6 first. Okay. Then I said, you know what? On certain days when we're not that volatile, I need to go down to a 6 Unirinko. Like, there was a signal here at 1402 to go long. Now its target 3 was all the way up here, and it actually did not make target 3 out of the box. But we're talking about, this is 1401.52, and the close of this candle over here, this candle was 1403.12. 1 minute and 15 seconds to do that whole trade. If you don't, let me digress a little bit. If you're trying to do this manually and you don't have the capability to plug in OCO type patterns where you have a strategy that automatically puts it in there, you're going to have a tough time in a quick moving market. So one that puts your standard cookie cutter out there and then you adjust it is the way to go. However your trading system allows to happen. But that was on a 6 Unirinko. I would never do a 6 Unirinko on the FOMC day after release. So let's skip that one. And we went back over here to 10:30 this morning. We got some signals. So you get more signals with the, I'll call them lower time frame, the faster reacting Rinkos, like the 6. But the problem is you get more false signals as well. So you get more signals, but you get a lot more false signals. With the higher number, like the 10, you get fewer signals. That could be good or bad. And sometimes they'll be later than obviously you would get with a 6. So you could actually miss good trades because it didn't signal quickly enough. So one of the happy mediums I came with a couple of weeks ago was to use an 8, but somewhere in between. It's an 812 instead of a 1014. The reversal number has fewer impacts than actually the number of ticks in a candle, in a bar. And this works pretty well if you're doing fairly short-term trend trading. Now, if you're trying to do faster trades, maybe even reversals and whatever, you may want to go to a smaller, I think a shorter time frame. And I say time frame is in the in when they actually can form a candle. Because if you get reversals, you're going to want them right away to show up, or at the top, or the reversal here right on top of R1. This one shows up really well on the 6, but it doesn't show up very well on the 8 or the 10. Okay. So the time frames are really more dependent upon the volatility. how much you're going to be able to give it. I mean, sometimes when I first went over to the 10, it was asking me to set targets at, you know, 30 to 40 to 50 ticks away. Well, let's say it's 40 ticks. Well, let me take 30 ticks, which is the extent of what I want to do. I take 30 ticks. I got to multiply that by $5 a tick. That's $150 times 2 contracts. So that's $300 a whack. It doesn't take very long for you to have 3 losing trades and lose $1,000. And as I did yesterday, I proved that you could do 6 losing trades in a day, in a row. Now, they weren't all losers, full losers, but that would have been somewhere around $1,400. That would have been a big hit on an $8,000 account, or $18,000 account now. So you really have to judge the trade-off between sensitivity to price movement, where the levels are going to be and how far away they're going to be. Most of the time they don't move a lot from one time frame to the other, but sometimes they do. I like to stay on the highest possible time frame I can and still not get enough signals that are viable signals. Okay, I hope you understand what that means. I'm trying to say. Okay, wanted me to discuss each indicator and how I use them. Well, let's start. Why don't I just do it this way? I'm going to go over here. I'm going to do a new chart. I don't think you're going to see this, but maybe in the replay you will, so I'll bring it up. Let's do the old. Let's take the Dow. I'm going to brace on last. We're going to do it on Unirinco. We're going to then set it to 6, 2, 10, 8, wait a minute. Yeah, 6, 10. Okay, 5 days. I'm going to bring that over here and cover everything up. I'm going to go ahead and turn the chart trader off at the moment. All right. And what I want to do is I want to go to indicators. Removing all of these swing and pivots. All right. Now, oh, I know what I didn't take away. I was trying to start with a clean slate. Okay, so now basically what we have is a clean chart. We, Erenco 610. We're talking this morning. Lots of chop. All right. What I think I've got left over, the vestiges. These little green dots are exhaustion. Can I set the Renko bar settings on trade station charts? SP, I have no idea. That's why I was attempting to open a trade station account so that I could set up all the settings and just basically give it to you. I've not worked with anybody. I've offered, but I haven't worked with anybody to be able to have the custom settings. But I can tell you what they are, and then you could go from there and try to cobble them together. I mean, that's. I found when I was doing the research on it that a lot of the indicators that I'm using are not available on TradeStation for free. I'll say readily available. You're going to have to pay through the nose for some of them. Which is why I think a lot of people use NinjaTrader, because there's a lot of indicators that are out there that have been developed for free or for a very low cost. So I apologize for that. We're going to get the 2:30 press conference now. I'm going to press on here. The Counterpunch Trader system is sold by people at NetPicks. I purchased their CPT Counterpunch Trader Express after using their what do they call it? Not a claims jumper, but it's pattern jumper, and it was okay. Then I found out about CPT, Counterpunch Trader, and I used their Express. It was about half price, and then I bought the full enchilada for about $1,800, and I like it for what it does. There are some things that are a little bit different about it. It basically does breakout trades, and intraday breakout trades usually work fairly well for what I'm looking to try to get. Don't need to get a ton of movement and a ton of follow through like you would on, say, an hourly or daily chart. But be that as it may, there are times where you don't get follow through, and it hurts if you only have one system trying to make it fit all types of markets. And so I'm looking at some reversal settings on some systems here. But like this bottom here was V bottom, and one strategy is to go after these have gone long down quite a bit, is look for a reversal and then maybe pick up some way to get at the bottom. But this is an exhaustion point from Counterpunch Trader. Red means it got up, and this is 2 ticks above the high. These green dots are 2 ticks below the lowest low. And what Counterpunch does is it watches to see if there are multiple swing levels, exhaustion levels, in the same direction. So what I'm really going to do is, obviously on indicators, I'm going to add in things like moving averages. Let me try this a different way. It's going to take way too long for me to put all of these things up individually. So what I'm going to do is I'm going to put up everything, and I'm going to zoom in. And show you each one of them as we go along. Okay. The first thing I want to talk about is the multi-moving average thing, where I have a thing called a signal line here in relationship one moving average to another. I have a 9 volume weighted moving average and a 20 simple. This 20 simple line, when it's going up is green, when it's going down is red. That in relationship to the signal line, they used to use it for signal as in buy or sell, but I just keep what the authors say. That line, as long as it's above the 20, we're considered to be in an uptrend. And so this is color-coded blue. It's actually a greenish blue-green, but it's turns into blue on with the background gray. When that's below the 20, what we've got is a downtrend by definition. It turns that red. And when you see that it zigzags back and forth, this is why I say that that would be in chop. Chop zone. Chop equals no trades. All right. I color code my my bars, my candles. If you were an up candle in an uptrend, so if the trend is up, the 9 over the 20, and you close upwards, you're going to get a bright green candle. If you are in this uptrend and have a down close, you're going to get a red or kind of a salmony pink color, not solid red, because it's basically telling you that it's a down candle in an uptrend. Don't get too excited yet. And you see a whole bunch of them in a row. And this one is the last candle. It says up at an uptrend, but suddenly it gets over here and the trend is down, but the candle's up. That would be light green. And if we're in a downtrend as defined by the relationship between the 9 and the 20, and you close lower than the prior bar, it's red. In fact, this is also a continuation pattern, but hey, we'll go to that later. So does anybody have any questions on the moving averages and the colors of each of the candles themselves? I'll leave it for a second while we see if AI has any questions on that first part. Oh, I should have gotten more water. Okay, we'll move on. Hey, RJ. All right, let's pick up. I've got swing levels here, the dash lines here in red and in green. Let me see if I get it. Yeah, we've got some green ones here. Okay, that's basically showing where the swing levels were. They're in relationship to the exhaustion levels, except the exhaustion levels are 2 ticks away. This is at the exact low, and I've got them extended quite a long distance away, whereas the dots, the exhaustion dots, only go about 3, and then it stops. Well, I don't find that to be all that useful. I take away those dots. I can't find where I can do in the code. It's hard coded in there. The exhaustion dots. Okay. have here, I'm going to talk to you about, are the counterpunch trader signals that I have. You do not have to use them. In fact, I don't use them all the time. I'll do a trade without them or trade ahead of them. But anyway, this it comes up with this proprietary mumbo jumbo about swing levels. And it came up with a short signal right here, which I kind of agreed with, to 11 o'clock. And it's in a downtrend. It crosses underneath a prior swing level from over here. And I look at the momentum indicator. So this momentum indicator here is really looking at two levels. It's an ADX type of indicator or whatever. It's called a chop filter. And all I really want to do is I want to look and see, I consider this to be the higher time frame. It's a proprietary indicator for people that have counterpunch. Ninja Trader 7, they have a freebie. For Ninja Trader 8, they did not create a free one. Okay. NASDAQ took a big dive. Okay. And what it does, let me see if I can zoom in a little bit more here, is it will come up with counterpunch system will identify an entry point with a cross, the stop level with the green dots right here. You can just barely see one. It just happens to be right on top of the bottom of the 5-minute opening range. I apologize for that one, but you can see the green dot over here and here for this one here. Okay. Then it comes up with a target 1, a target 2 with a small dot, medium-sized dot, and large-sized dot for target 3. It turns out to be somewhere in the neighborhood of about 0.75 to 0.8, 1.2 to 1.5, and 2.0 times the risk here for the third target, approximately. And it figures out a stop. It says that's the entry. It says 2 ticks above the last swing level is where the stop is. And it computes the difference between those to be your amount of money at risk, and then they define it in ticks. This little orange dot there is called a money management level. And that's usually around 50 to 75% of the move to target 1. This one looks a little different, so I'm not sure what the real calculation is, but what it says, as soon as I get down below this level over here and that candle finishes, I go down to the next candle, I'm going to move my stop down. So it moved the stop down, moved the stop down, it moved the stop down, and then it moved the stop down on all 4 of these. Okay? As it kind of stepped its way down. And as this, all right, let's go back. Getting a little bit busy there. Those being the targets. When we get down to target 1, you take it. If you get down to target 3, I normally take it and not trail it. One other way to do it is to trail it and give it a chance to breathe, to bounce, and then go back lower. Well, the way you do that is you play and set your stops and let it come against you, take you out. What I have found, Cabby, you need to go into the lower right hand corner into the envelope, the folder, and pull it out. What has probably happened is that you probably have a setting on your browser that's prohibiting it from showing up. Did you try to do it by going through the folder or just for the link in the room? Because it's been working. Try that and go under Charts and Patterns ebook Rev 3 in that folder in the lower right. If you can't do that after this, you can send me an email. I can send it to you. All right, so I normally find that as soon as it hits target 3, that's usually a fairly large extension. Unless the more drastic runs, they'll usually pause or pull back or reverse. So if you get to target 3, take the money and be happy with it, because usually it's going to, the trailer will get stopped out much higher than where target 3 is. Let's talk one more thing before we go on, and that is, what are these little orange dots? These little orange dots, okay, good. These orange dots are called volatility stops. They're chandelier volatility stop. It uses an average to range, and I put the values of 2 standard deviation, looking back 15 candles. And they usually start somewhere around where the swing levels are. Another thing will happen is if you're above it, you're going, it says you should be going long, your average to range, you haven't busted it, they'll be in lime green colors. As soon as it flips the other way, you'll get a triangle. Orange to the bottom, green, and that's what I call a volatility flip. Okay. Those aren't as significant, and I've got those in there. Sometimes we can't see them, that we need a little bit of help trying to determine whether we had a volatility flip or not, and this will highlight it. I can turn those off if we want. And I find that it pretty much matches where the signal line is, and pretty much matches a little bit faster than the Counterpunch Trader trailing system for one. But I like it because I can use it when it doesn't have a, let's say that we're over here, we went short. Let's say we went short here. We don't have a counterpunch system. Where can I use my stops? Well, I can use the ATR as a volatility stop. I could use those. And that's why I have them on there. And it double checks where whether the Counterpunch Trader system is working well or not. Okay. We've covered these. We covered the exhaustion points, covered the swings, covered the colors. We covered the 2 trailers. These little dots are really an extension of these. They're more swing levels. Okay, now let's talk about momentum oscillators. All right. Let's do this. This momentum oscillator is slower to react. You're going to see where we hit a V bottom here. It kind of rounds the bottom and doesn't really get started up until you're well up. pointed up. However, the R squeeze, which is a really fast one, it pretty much matches the bottom 100% and starts to go up immediately. So what I've got is two momentum indicators here. One I could call my slow momentum, and one here is fast. Okay. And you'll see the top here pretty much matches there. And if you get pretty close, this one kind of lags a little bit, but it really is pretty close to the top, but it lets the pattern work a little bit before it actually goes back down. It tries to measure momentum, but not as fast. Notice the difference here. We got topping action here. We really didn't get topping action for another 2 or 3 candles in our slow one. Another thing that I have to judge, all in real time, by the way, I have to look at these numbers over here and determine whether they are extreme or not. And that comes from experience, because there's not going to be anything that tells me it's an extreme number. Depends on another thing. Excuse me. Depends on a number of factors. One of the factors is, what's your Unirenko setting? The other is, what instrument are you trading? The Dow, in this case. The NASDAQ will have the highest numbers. The next highest numbers will be Russell, and the lowest numbers will be the Dow in the one-side trade. Okay. Let's see what we got here. Are there any other indicators there that you see that I have not highlighted or talked about? Okay. Now, I've talked about what the indicators are. I'm not going to talk to them. It won't be short. All right. What I haven't talked about is how I use each of these. It's R squeeze, Herb. It's very similar to the TTM squeeze, trade the markets squeeze indicator that John. What's John's last name? Carter. Yeah. I was having a senior moment. John Carter kind of popularized it. He wasn't the inventor of it. Okay. Well, I was trying to be a little more. Yeah, anyway. And if stuff's not copyrighted or whatever, people can yeah. Okay. So this right here, the squeeze is basically, if you find a squeeze indicator, I mean, Herb, what are you trading with? What platform? Charting you use. I don't know what MC11 is. And that's MasterCard 11. Yeah, you can pay me. Multi charts. Okay. NT8. Yeah, I can give you the R squeeze if you don't already have it. It's not a problem. Since you got an Inch Trader 8, I can share with you all of these indicators. Thought I might have already sent you most of them. All right. How do I use the crossovers here? I use them to help judge the trend. What is the top momentum? It's a proprietary indicator by NetPicks. It's their chop filter. I believe if we wanted to reverse engineer it, we'd play around with an ADX indicator, and I'll be working on that to see what we can do. Because right now it is proprietary and it's locked down. Okay, yeah. Now, and it does have two moving averages that you're supposed to use to judge when it's crossed down. I mean, I can see when it started to move up and down. All right. I use these multi-moving averages to help me visualize the trend. I would like to be trading long when it's bluish and short when it's reddish. And if it's kind of flat or crossing, I don't want to be trading at all. That's how I use those. And I call that my death cross. That's a death cross. And when this is flattening out right here where it stopped, it was going down and then it really kind of flattened out. Well, guess what? We had a bottom in there, and the R squeeze already warned me that it was going to change. Now the moving average is still going down because for every, it needs 2 or 3 closes above this to actually turn that battleship around. I don't have to wait for that to tell me that we are possibly going back into an uptrend. Okay. How do I use... Okay, let me see. Trying to find... Oh, did we check that? We didn't. All right. How do I use the? All right. Let's just say that we were looking to trade around 1245 or so. Move up, then to move down. We're down into a downtrend. I'm looking for a break below a swing level. I get one down continuation here and another down continuation here at a prior swing level, which is right there. Yeah, I recorded it, but I'm not going to share it with anyone. No, I'm actually going to post it out to the YouTube channel as soon as I get done. I'll render it. I've got to go to physical therapy and then I'll be right back. Okay, so what we've got going on here is that we've got a continuation pattern bounce right at a prior swing level. To me, this is a perfect entry. What we're going to do is we let it bounce and let it fail again. It actually goes down to a swing level. I'm not sure where that was being picked up from. And bounces, and it bounced back up to right there. If we didn't get in here, we would definitely get in on this one when we break down below here. And what I use here in the indicators, I'm not necessarily concerned about the continuation pattern yet. What I'm really wanting to watch is, okay, let's say that we would short here. Where's the stop? Is the stop going to be all the way up here? Well, Counterpunch would probably say so, but I don't. There's one swing level from here that you could use, or you could use our hand handy dandy volatility stop. And that puts it pretty close. Now, if you went short on this candle right there, you have not established a very strong downtrend yet. But if you go short on this candle right here, you already have a downtrend going. This is the one I try to pick up. Now, the fact that is its target's probably only down here. So, is it going to make enough for us to make it worth our while? It's going to be about just under 580, and the target there would be 545. And let's call it 575. That's 30 ticks. Yeah, I could probably do that. This is at 30 to 35 ticks, and 36 is a full winner for me. And of course, it actually blew right through there and came back up. So, yeah, we would have been a full winner. We know that now, but I did the calculation beforehand. And remember, I've got target 1 is 16, and my second target is 36. Trading 2 contracts. And I use each one of the lower closes. I get to lower the stop, get to lower the stop, get to lower the stop. Now when I get to the target, I've got to choose whether I take the money at target 3, target 2 here, or do I try to let it be a runner? There's where judgment comes in. The fact is that we've had a huge run down from 630 to 530. We've had 100 points with very little bounce against us. Do we think that this is going to continue for another 20, 30, 40 ticks down on a straight move without some sort of push against us? I don't think so. So I know I would normally just take the money as quickly as I got some sort of motion against me and get out at target 3. But you could wait and get the volatility stop to take you out. Okay. We talked about the swings as target levels there. And how do I choose my swing levels? That's as much an art as it is a science, but it's a lot of science level of, I have to look, and what's really difficult to do is right up here on this day, we've had a swing level here, and it's generated by the computer. And that looks like a pretty good one because there's 2 of them that are almost superimposed on one another. What gets a little more difficult is when we have multiples very close to one another. You got this one, you got this one, and you got that one. And couple that with the fact that the slope of this line is pretty flat. Would you say to make dots easier to see? Are you talking about easier for you to see on the display because they're too small? If I make them bigger, it's going to take over. You got to know, you got to be, I try to make the indicators as non-intrusive as possible so that they don't, that I have to look through the price. So price is first. I try to make the dots blend in the background. I try to pick a happy medium. If it's not because you can't see your chart, I'm not sure exactly what I can do. That's why I suggested you have 2 windows. You can't zoom in anymore maybe. There's very little control there. So we just have to have we'll work together on it. Well, could you explain to me, is it the color of the dots? You said just easier to see, but easier to see, I mean, it could be color. It could be color with matching the background. It could be the size. But I have tried to make them as small as possible, but with colors that jump out. Now they jump out to me. They may not jump out to you looking on the chart, but that's why the two windows and maximize your chart display. You have to do that. Take away, if you're really looking and interested in the chart, not interested in who's here, minimize that list of members and people who are signed in. Get rid of that and show just the chart. One way to do it is hit full screen, and it does nothing but chart. Have you ever done full screen? Okay. How do I get back out? All right. Another one got in the middle of me. All right. So go to full screen. Let me see what it shows on mine again. They seem to jump out pretty well on mine when I go to full screen. I'm zoomed in, obviously. If I'm at a small chart, it might be a little more difficult, but I thought that I did my best. Anyway, let's move on. Swing levels, we covered about that. I tend not to mark the pivot levels that are there. I use them as they're there and to see if there's a reaction by the market, but I don't use them as some others might use for targets and entry levels and things like that. I don't. Now you got one swing, two swings, three swings, four swings here. Which one do you use as the top? Well, I try to use the most current one, and I will draw a solid line. I've got it in peach, so it shows up, and I'll draw that, and it draws forever to the right and forever to the left. If a day or so or 2 days from now, it starts to come back up through that level, I'll see the peach line. I may not know where it is, and I'll zoom off to the left. Let's see what we got over there. And if I got over here and I go, oh, there's a peach line. Where did it come from? Well, did it come from there? Probably not. It's on swing level. Steve probably didn't get it from there. He probably got it from God knows where. Now the thing is, we've gone through that level a number of times. Is that level still valid? It's probably not. At some point I should clean them up. So I could take this puppy and move him up to here because that's the most recent one. All right, well, move it up a little higher. Now, I use the bodies. I don't use the extremes because that's the most conservative when I'm going to go the way up or down. All right, so if we want to come back up again, and we're looking at 26,630. Well, there's 26. Oh, that's a down. Okay, that was a down. That used to be this one. Now it's about here. And then if I'm zoomed in so close, and I want to get that one right there. And that's basically, I'm adjusting these as we go on the fly. I set the swing levels. No. I try, Alan, to leave the swing levels where they are, and then if it comes up here when I go to the left or the right and it comes back through there, I go, well, is this valid anymore since I've been through it 2 or 3 times? Their answer is no. So what I'll do is I'll probably grab it and then just move it up to there. That's the art part. Now, I've started doing something this week that I've never done before, and that is my point of control off to daily. And the only one that applies to right now is the Russell, that 1716, 1717 level. Let me move over and see what it's at now. And the Russell is weak. It's down at 1706, 1707. It's coming awfully close to that 1703 level. And I marked up the high. Got 3 levels. Got the high here for a swing, the low level for a swing, and this one right here, 1718.4 now is the volume point of control. And I base those on volumes and swing levels and the volume profile. And I'll mark those in the blue color so that we'll know where our points of control are, that when we get around that level, I don't lose sight of the big picture. I need to pick up the pace just a little bit here. Did that answer your question on swing levels there, Alan? You were the one. Somebody asked the question, what setups or patterns do you find work best? Well, a lot of it depends. Great. A lot of it depends on the market, the situation. But here lately, I really liked when I get in the NASDAQ. Oh, I could actually kill that one. Yeah, close the window. All right. What I've noticed on the 10 Unorinco, I really, really, really like the continuation patterns. Like that one right there, right sitting on top of a swing level. It's worth a shot to go long. Let's get rid of that. Carlos, no. Unorinco is a custom indicator, but I think I found it in a free resource, only available for NinjaTrader system. Another reason I love the NinjaTrader system, you can get lots of indicators either for free or low price. Unorinco. Oh, wait a minute, wrong place. Data. Okay. Let's go to indicators. I think I'd have to look that up. Well, I think I got it at futures.io, but I'm also a VIP member there. I paid the money. Do you use NinjaTrader 7? I mean, sorry, 8, Carlos? if you send me an email, if you use 8, send me an email to that address and ask for that indicator. I'll send it to you. Okay. All right. But the best pattern changes over time. Now the continuation pattern, which we had asked for earlier. Okay. All right, there's one right here for the in the morning trade. Okay, and somebody had talked about, what are the best setups, and I'm going to jump ahead to the continuation trade and the measured move. What I find is if we get, would you stop? All right. Sorry about the interruption. When we get a move, and this is absolutely, this is one of the best ones. We're coming off of basically being oversold, and then we bounce to start the day. Whether it's start of the day or not, but we basically do it in a reversal. When is it good enough to go long? Well, I want to see that we are changing the trend from down to up. We did a sideways move. We've got the slow momentum indicator changing up, and the fast momentum indicator is up as well. So both of these are from below coming up, from below zero. That's a perfect trade to go long above this level. And what we do is we measure from the top to top and top here. So what I did, no, I didn't do that. All right, what I did is I went over here and copied it. I just created it, did a copy, paste, and then moved it to right off the top of that level, the breakout level. And it gave me an idea of where a one-to-one measured move would be, kind of a Fibonacci level, and it said that it would be just under this swing level. And if I did Fibonacci expansion, it would not be outside the realm of possibility that would be the target right there. So we've got a confluence of a number of different things. Some people use measured move one-to-one. In fact, this is really a Fibonacci move from the bottom, and it's probably a 1.382 to 1 expansion. And if I took the time, but we had the time and spend an hour and a half to get here, I'd probably go ahead and prove it to you, but I'll prove it to myself later. That this is approximately 33% move if you go from here to there, and from there to the top right there. All right. And you notice that we actually could not get above that swing level. Try as we might. Okay. It says, what are the criteria considerations for using each of the Renko settings? I think we talked about that earlier. If I'm trading at night, I want to go down one notch. If the markets are slow, I want to go down a notch. I don't go down 2 notches because it's night and slow. But it's really an art. And here's the problem. When you go down to a lower, I say a faster, more sensitive Renko, you run the risk of getting false signals, more false signals. So the quicker you have your signal, the more quick twitched it is, the worse it's going to be as far as providing bad signals. So it's a trade-off, and you're going to have to play with whichever one works for you. I can tell you that I use the 10 in the Nasdaq and the 8. I'll use the 6 in both the Russell and the Dow now, currently. That might change again. If the markets change like we did from February to now, or to January. January, when we had that sell-off and the volatility was way up there, until the volatility either settles back down, which it may never get to again. I mean, that was kind of a once-in-a-lifetime opportunity to trade. Yeah. So you have to use the settings that are best for that instrument and how it behaves and the market you're in. And that's how it's behaving, whether it's trending or whether it's gyrating like crazy. And I'm able to notice it's gyrating like crazy because you can see all the Mexican jumping beans around there on the charts where you have lots of tails and wicks and not a lot of trend to it. That's another reason using the Renko. It'll eliminate a lot of the noise. Said the other question here was, why didn't I use Renko for ES? Well, why don't we show that? There's a 3-minute chart for the ES. And the beginning of the day is way over to the left, but I could use a tick chart. But when I pick out a tick chart of 512, I go, I get a lot of wicks. I get some trending a little bit. Not too bad, not too shabby. Each one of these, let's say this big bar here, it was a high of 29.28, and its low was 29.26. I call it 29.27. That's one point is $50. So this is only 4 ticks. Okay. Now this is judging it on the trade on the number of trades before it draws the next one. I'm not that kind of guy. I want to find price movement. So why don't we just pick out the Unirenko 6 that we used on the Dow? Holy smokes! I've got the whole day in just one side over here. Well, yeah, we got how many signals? We got one on this today. We got 1, 2, 3 signals all day. Okay, so I got to go lower. Lower number. 4. Now there's almost no overlap in these things. And as it was, I got 1, 2, 3, 4 signals in a day instead of 3. And it's starting to get a little herky-jerky here. So for the Renkos, I couldn't find anything that I thought worked. On the tick charts, I could probably try, I got to be really clever this morning. I said, well, why don't we use 666, the devil signal? And it actually turned out to not to be so bad. Okay, so really a lot of it is how sensitive do you want to make it and whether it tends to work or not. Now, when we were flat this morning, till we got to the 2 o'clock time frame, it kind of worked and kind of didn't. You look at here, it's just messy. And that's probably that plus the fact that it's $12.50 per tick is the reason that I don't trade the ES. And yes, VJ, I'm hearing you talk to me in my ear right now, but I just really I can't see a good way to do it. Maybe on a time-based chart it works. The 2 is too sensitive to me. The 3, sometimes today's probably not a good day to be looking at it. All right. The next questions had to do with the continuation pattern. Again, let's see. It said, explain it in relation to the measured move. I think we've got that already. When we covered it here. And how many ticks above or below the continuation pattern high-low do you use for an entry? All of them I use as breakouts as 2 ticks. It's not a lot. But, you know, if I'm going to have a swing level break, like the swing level break here would have to be 2 ticks below. So it'll be somewhere down in there. Okay. Swing. There's the swing level. And I'd make it about 2 ticks above that. It would have taken me out right there for the volatility stop for a small loss. Up here, don't have to wait for that cross. That red line, those red dots, that's the long. There. And then you would basically extend it out. I don't know where the last level is. I didn't catch one there. So, okay, let me get rid of this puppy. All right. Final question. Do I wait for a candle to complete before entering a trade? Counterpunch traders waits till the entry and the candle is done drawing. Before it goes long. And then it says you should go long next time it gets that level. As far as I'm concerned, if I like the pattern setup, I like the momentums and whatever, I go long. I don't let it wait. It is a more aggressive. Now, one change to that is I really, really, really need for the continuation pattern for it to complete. Because there are many times that you'll get a move up here and then a move right back down and it closes still back down inside the box. We had a continuation pattern here, but it didn't follow through. We got several more candles, and then we got another candle over here at the end with the R squeeze up at the top, and that was the last gasp to the upside before it rolled over. So be careful about not forcing the candle to complete before it, and the pattern to complete before you go long. Now this was no longer a continuation pattern. It was just consolidation. And really, continuation pattern is nothing more than a three candle consolidation. But I love them. They tend to work a lot. Look at what happened over here. 3 candles lower. Boom. 3 candles here. Higher. Boom. 3 candles higher. Boom. 3 candles higher. Boom. It works. Now, does it always do a measured move? No. But if it moves a little bit, I can probably get to target 1. And if I get enough target 1s, I can quit for the day. And heaven knows, maybe one of those target 1s will get all the way to target 3. All right. All right, I'm open for any more questions that come out from the peanut gallery. I want to thank everybody for being here. I will render it and post it up tonight. But do you have any final questions? An interesting day was had by all. I don't know if I know what that means, Pablo. Pablo, I'm going to assume you're talking about on a chart, right? Thanks, John. Everybody know where the YouTube channel is? Want to post it again? I'll get right back to your question there before everybody leaves. Possible. Go ahead and subscribe to the channel. You'll get all the videos. They're free every day. Don't hold anything back. All right, let me try with a new chart, Pablo. New chart. Let me see if I can get it to not come up gray. Well, I have the default set, Pablo, so it has everything in there. Let me see if I can get it. The properties. Is that going to blow you away there, Pablo? Now, I used to have white, and that was my chosen color. but people complained that they didn't like it. That it was too bright on them. I went, okay. I mean, I'm not going to be able to solve and to make everybody happy. But which do you think looks best? Is it too bright? My future's so bright I've got to wear shades. Is it? Which do you prefer? Yeah, I could. Okay, let's try this. Is that any better there, Steve? Because it's a white smoke, so it's a little more subdued, but still white. It all depends on how the brightness intensity. Yeah, the brightness and intensity of your screen is. All right, let me try another one. Getting, that's a little more muted. That one starts to wash it out a little bit for me. But actually, you notice that it starts changing the colors when you of the candles. Okay, let's get another color. There's silver. Is silver any better than the gray was there, Pablo? And I'm talking Steve. This is not quite the gray we were before. Was it okay? I agree with Herb's comment. So that peach dot, so if I change the color. Okay, let's go here. Nope, that wasn't it. Let's do this. And cancel. That's what it is. What was better contrast there, Herb? The one we had before? We should have had this conversation long before now, I bet. Oh yeah, we've gone into why is this white over there? Okay. I think I've just, all right. That's too bright, right? Okay, now I'm getting the colors to go. All right, there's the two colors. One's muted, one isn't. All right. It changes the color of the candles too. Do you notice that? The salmon pink becomes kind of a muted, dull, ruddy orange. All right, we'll call that a night and a wrap. Thank you very much for